Good morning and happy Friday. You're watching Businessworld Live. I'm Danie Laurel. It's the start of the last trading day of the week. Let's go straight to our top story. The Bangko Sentral has vowed to maintain an accommodative monetary policy to support the economy's recovery from the pandemic. BSP Governor Ben Diokno said the central bank would extend the current policy stance until needed by the national government. At the same time, Diokno downplayed the possible impact of the Omicron variant on the economy. He said the Banco Central is, quote, not so concerned about the new variant and that there is, quote, too much exaggeration, unquote, about it. The Philippines has earlier joined a number of countries in tightening border restrictions following the detection of the Omicron variant overseas. The World Health Organization has also classified Omicron as a variant of concern. NEDA wants a pandemic flexibility law that will help the government respond more quickly to public health crises. Socio-Economic Planning Secretary Carl Kendrick Chua said the proposed law would be similar to the National Disaster Risk Reduction and Management Act, which was designed to protect the population from natural disasters. That law also provided for the creation of the NDRRMC. But Chua says the Pandemic Flexibility Act can complement what the NDRRMC law lacks in terms of funding and financing flexibility. He said the proposal would strengthen the government's ability to respond to future health emergencies and roll out health and social protection measures. The Pandemic Funding Flexibility Bill is part of Chua's 10-point policy proposal aimed at speeding up and sustaining economic recovery from the effects of COVID-19. More Omicron cases being reported. You can see on my Bloomberg terminal here basically a map of where these have been reported. But as it seems, at least for markets, the concerns seem to be easing for now. And if we take a quick peek at how the markets closed overnight, at least in the United States, you can see some green finally coming back here. The S&P 500, for instance, recovering up by 1.4% together with the Nasdaq after several days of sell-offs. And let's take a look at Asia Pacific. A little bit of a mixed picture this Friday, but generally in the green. For instance, the Nikkei 225 up by 0.1%. However, over in Singapore, it's still in the red this morning. And you've also got Korea. They've just also announced a few cases of Omicron there. That is down by 4.7%. Let's take a look at our own index. Now, what happened yesterday is a rebound above 7,000 levels, and we seem to be picking up steam. We're up by 0.8%, firming above that. Despite actually the foreign investors having sold the stocks for the second consecutive day. Yesterday, we had net sales from foreigners of around 1 billion pesos. And despite that, we still managed actually to stay above 7,000 levels. Now, let's take a look at our movers for the week. Let's just take a quick peek at how this week has been. It's been torrid. You can see the best performers, about four of them. There's Converge, there's ICTSI, Wilcon, and JG Summit. So quite a mixed picture of why these are the best performers of the week. We're going to ask our guest later on, Tina Ulang from First Metro Investments, why that is so. But on the downside, clear picture, Bloomberry, of course, casinos, Jollibee as well. But even Globe Telecom is in the red this week, one of the worst performing. And of course, you've got other property players also being those of concern. Let's just take a quick peek at the banks and how they are opening this morning. They're actually up by 1%. This, of course, on the back of Bangko Sentral Governor Ben Diokno's comments that, we shouldn't be that concerned. They will continue to be accommodative when it comes to the interest rates. And speaking of banks, look at the best performer right now, Union Bank, up by close to 7%. And incidentally, of course, you have this exclusive from the Philippine Star that they have already bagged Citi's 1 billion peso, $1 billion bill retail business here in the Philippines. This is, of course, the Aboitiz led Union Bank of the Philippines acquiring the consumer and retail banking assets of Citigroup here in the Philippines. Now, this is according to a what the Philippine Star calls a highly placed source. They say that that deal is expected to be signed in the next 2 to 3 weeks. The source called it a match made in heaven and says that the transaction will be completed in the second quarter of next year. The bank also confirms that there will be a plan. Sorry, the source rather confirms to Philippine Star that there will be a plan covering 1,800 employees of Citi's retail and consumer banking in the country. And he or she says that this plan is good for the banking industry because, of course, the people, the workforce will be retained. They will not, lose their jobs. Union Bank and Citi's retail business, according to the source, is a perfect combination. Both are digitally advanced. So just to recall, Union Bank is strong in mortgage. Citibank is strong in the credit card segment, and that source says it's a match made in heaven. And indeed, investors already flocking to buy this stock. And finally, just a quick peek on the telco space here. This, as an open signal report, has said that the Philippines has shown the biggest improvement in download speeds globally. So you've actually got the 5G speeds nearly 10 times faster than the 4G speed. So finally, some good news here when it comes to our internet. Now, here to chat with us this Friday morning, we have with us, of course, Tina Ulang. She is the head of research of First Metro Investments. Good morning, Ma'am Tina.
Hi,
Welcome back.
good morning. Good morning, Dani. Hi. How are you? Nice to be here. Thank you for
Thank you,
having
ma'am,
me.
for always joining us. Let's talk about this nice rebound that we're seeing here, closing up on 9 tenths of a percent. What is this? Is this showing signs that it was all just a knee jerk reaction, or is this more a technical rebound from a huge sell off that we saw?
It is just the beginning of, I think, greater volatility, more bumpy ride toward year end. But you'll see also the resiliency of the market. After the knee-jerk sell down, there's a recovery, and it's a realization that this is an opportunity to buy, knowing that the reopening story, the growth story of the Philippines remain intact. But that is not to say we should underestimate Omicron. Omicron, as we all know, the World Health has said is of high risk, highly transmissible. But what we have now that we don't have last year is really the technology to counter the spread, which is the vaccination. And we would be reaching 40% coverage, which is the critical threshold acceptable to the World Health Organization. And hopefully even surpass that by the first quarter of next year. So that is going to allow the economy to reopen and to keep the corporate earnings momentum on the path of growth. I think that is what is underpinning the enthusiasm to accumulate and to bet on next year's recovery, knowing that we have an election year, and election years usually has a 1% add-on to the average growth of the country historically. So and infra also. So there are many sources of growth for next year. But of course, unless we have a tough lockdown, but I don't think we are going to revert back to the very severe tough lockdown that we have last year, because last year we don't have the vaccine. Now we have the vaccine, we have the booster shot, and the logistics are improving also. And pharmaceutical companies all over the world are tweaking the vaccine recipe and coming up with drugs, molnupiravir and another one from Merck. So the entire globe is slugging it out and fighting it out just to survive, so that the economies can continue to be on the growth path.
Okay, ma'am, do you agree with Governor Ben Diokno exaggerated now, and even some analysts here, for example, JP Morgan, saying this is the time to be buying in. But when we look at the technicals, it seems na the bounce back at least about 7100 na ngayon is a little bit overbought already. So where is the support here? Where is the resistance?
Mm-hmm. Well, the market is going to be a lot more sentiment driven and less appreciative maybe of the macro data. Because if you're going to look at the macro data, we're very strong. Our GIR, 12-month import cover, could keep the economy going. We can import most of our requirement. We have the funding, and our deficit is just within target. Our inflation is re- expected to be back to the 3.5% target of the BSP next year. So the macro data is all suggesting that we should be confident about growth. But the market is not looking at that set of data. The market is distracted and is worried, nervous about the spate of bad news, and that is what's being priced in by the market, discounting the recovery story, because you have the possibility, which is still a possibility of maybe high transmissibility and infection. Hopefully the hospitals do not get swamped with cases and the ICUs, because we have the vaccination. That's why it's important to really ramp up the vaccination, which we are seeing now in the 3-day program of the government, now extended. So in terms of devaluation, the market is very prone to selling. So that's why I'm saying it's going to be a bumpy ride towards year end. It's going to be range trading. The support could be anywhere a little below 7,000, but could stay above 7,000. So range trading between 6,009, 7,003 until year end.
Okay. Ma'am, will the consumption and the so-called Christmas rally still have a possibility in this scenario?
I believe so. I think once the market is able to realize that the COVID is here, this is the beginning of the pandemic period, transition from pandemic to endemic, which means we have to live with COVID and we have to get vaccinated and continue with our lives. And government, of course, mobilizing resources for the healthcare sector in a bigger way. So this is a new set of dynamic, a new set of lifestyle, and I think the market is going to realize that and will keep on going in terms of their belief in the equities in the Philippine growth story going forward, and therefore there is this opportunity to buy every time there is a bad news. Then you can accumulate for next year's growth story.
Okay, so still hopeful on that Christmas rally to come to fruition. Ma'am, let's talk about the 5-day performance and just take a step back. It's Friday today and what happened this week. When you look at the stocks, it's a bit, apart from, the casinos or maybe JFC, it's such a mixed picture on why, the top four, the only four in the green are specifically in the green, like JG Summit or Wilcon or ICTSI. Why is this the case? They sat out this sell-off. Let's start with that.
Mhm. Of course, the market is confused, and initially the consumer discretionary and the property sector are being bought up because of expectation of recovery, and then suddenly you have this Omicron, and then the lockdown in Britain, Israel, and Europe, and that has damaged the outlook as far as the travel aviation industry and your hospitality industry, the conferences, the events, the services sector is a bit damaged by the lockdown. So there is this rebalancing of the portfolio, of course, and the stocks that were previously bought might be top slice a bit, lighten up a bit, because this is the result. It's actually a rebalancing of portfolios, and you see the accumulation of more haven assets now, and maybe that's part of the aversion to risk, but it's not totally risk off. And it's part of the diversification strategy that portfolios ought to have a little of this and a little of that in order that it can benefit from swings from risk off to risk on. I think we will have more of that. That's why this year and next is going to be a lot more volatile. Of course, the political exercise is going to add more to that. But that is not to say that there is no opportunity. I believe in the continuing growth of the Philippine economy and the vaccines in place and the effort of government to really spur the vaccination drive, new technologies coming from the pharmaceutical companies. So this is the endemic period. We just have to live with the virus and devise ways to continue to balance the health crisis with that of the need to survive and to maintain growth. So
Ma'am,
best to buy those stocks that really will survive the endemic nature of the
okay.
economy, which is really all about the dominant companies, the conglomerates, those that have the bigger market share, the pricing power, able to pass on the cost, higher cost because of their brands and their dominance in their industries. Because you have inflation, you have to pass on cost. Lockdowns will be in place, inflation will be elevated, but that doesn't mean there is no opportunity.
Okay, so that was actually my next question, ma'am. Focus on picking up the blue chips right now and focus on, the conglomerates rather than the cyclicals. Is that correct?
Mhm.
We hold off muna on the travel tourism, even if they are heavily sold off. It's not a good time to be entering them just yet.
Mhm. Well, I think it's a temporary setback. This Omicron is a temporary setback to the aviation industry, but this does not end the possibilities, the reopening possibilities for the aviation, because the drugs are in place, the pills against the high infection. The lockdowns may be in place, but there will be a work around this, because the travel industry has to be reopened. The vaccination, the travel bubbles will be there. This is just a temporary adjustment period, I think. But Cebu Air and Air Asia and PAL will soon be flying in a big way, because the news right now is that the the uh, the transmissibility, yes, it is,
Mm,
but the symptoms are mild, and
correct.
therefore there is the healthcare, full utilization of healthcare is not going to be at risk, and therefore the lockdowns, we're not going to be returning to the tough lockdown. I think this is just a readjustment, recalibration of the travel protocols, health protocols, all over the world.
Ma'am, final question. What's going to happen to the upcoming IPO listings? We have Solar PH, you have the CREIT, and you have a couple that are still waiting for approvals. You've got Medilines, Figaro. We just saw Grab listing this morning in the US, and that tanked in its first day and its debut, despite the fact that, some are saying that it's very digital, it's very adapted to the pandemic. So will all of these things really affect the IPOs?
Mhm. I think the IPO should really proceeding at their earliest schedule, because this is really the time to seize the opportunity. The elections are coming. The attention is going to be focused elsewhere. But this is the dips in the markets now are creating the opportunity to buy. The investors are still focused on the equities market, knowing that the reopening is still in place. The arrival of the Omicron is very iffy. What's gonna happen? There a lot more data needs to be to get out there before conclusions can be made. So this is the time to really proceed with the IPO, and knowing that the PSA can stay very resilient, is still staying above 7,000, and the foreigners are buying in trickles, continuing to buy in trickles. They have not fled the industry. Yeah, they're still here, which means they are expecting more upside in this market. And the good news is that Governor Jokno is continues to sound very dovish, and our policy continue to be in place. Fiscal policy, monetary policy in place, 5 trillion budget for next year, and then election clarity. We usually have a political clarity after each election, and the market usually rises after each election. Fiscal policy, monetary.
So go lang, go ahead with those plans. Don't let these things perturb the
And
fundamentals, of
Danny,
course. Yes,
even
ma'am.
the foreigners are recommending a buy on dip. JP Morgan is saying buy on dip, and even Goldman Sachs is saying that the what do you call this, the link between GDP and lockdowns has been reduced to just one third of what it was, and therefore that risk has
Mhm.
diminished, because governments know how to manage. We have done our homework. We have the warm up. The warm up was last year. Now is
Two
the
years
real
of a
fight.
warm-up na.
This is now the real fight. Round one
Tama.
of the yeah.
Salamat,
Endemic.
ma'am.
Yeah,
Thank you
thank
so
you.
much, Ms. Tina Ulang of First Metro
Thank
Investments.
you. Bye.
Here are other headlines we're keeping our eyes on. The Philippine Star reports that the cost of living in the capital remained stable this year. The worldwide cost of living 2021 index of the Economist Intelligence Unit showed that Manila's ranking slid to 84th from last year's 82nd. This means the overall cost of living at the capital did not become more expensive this year, even after significant hikes in commodity prices. The EIU told the Star that they saw prices for clothing and items go down, while prices for household supplies, utilities, and recreation climbed. As a result, the price movements were balanced out. Meanwhile, the index showed that Tel Aviv in Israel is now the world's most expensive city, rising from fifth place to overtake Paris, which previously occupied the top spot. Cryptocurrency transactions in the Philippines rose 362% as of the first half of the year. The volume of transactions involving virtual assets grew over 360% year on year to nearly 20 million as of June 2021. That's according to the Banco Central. These transactions were worth 106 billion pesos in June. That's up 71% over the same period of last year. The BSP says this growth in crypto transactions is in line with the broader growth in digital financial transactions. And that's the first day look into the business day. Today is Friday, December 3rd, 2021. Catch Business World Live for the market close. It's at 3:15 p.m. today. I'm Danie Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.